Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. For those of you that's been following the page, hit that like right now. This one is going to be power packed, all right? But if you're new to the page, go ahead and hit the like, subscribe, notification bell. Lastly, do not fall for spam. In the comment section, we work hard to keep it as clean as possible. Today, I'm going to cover Tesla, but I'm going to be telling you some really key entry points, right? When we can make money. And I'm talking about 300% in years to come. And not many years. By 2026, I'm going to tell you when I'm going to be spending over $500,000 into the stock market. I'm putting all of my money into the stock market in 2023. I'm boldly saying this, not braggadocious. You guys that know me know that's not my thing, but I want to encourage you to see what I see. I've taken all of the data. I've taken looked at fundamentals. I've looked at what the Fed is doing with interest rate hikes. I've looked at some charting, and I just put it all together, and I have a plan for me. Remember, anything I say is not a suggestion for you to buy, hold, or sell, but scared money don't make money. And so far, I've been calling this thing correctly. And if you're with me and I'm over 85% cash now. If you're with me, the longer you have waited, especially for these companies that we're going to cover, these blue chip companies, you've been doing well. Actually, if you would have been buying now, buying dips, you would have been dumpster diving. Okay, so let's get right into it. Let's go right to Apple and just follow me down this path, please. Please watch this to the very end. So Apple, here's what I want to show you. All right. Let's look at Apple. Now, I will tell you that I had the privy to talking to someone that had over $10 million worth of Apple. They started buying Apple a year after it was formed. And this gentleman has over $10 million worth of Apple. And he is an Apple lover. He said he's never sold a share, right? I think there's times to do a little profit taking, but he didn't. All right, let's look into it. So what are you talking about, Larry? Look, so I just want to point this out. For those of you that bought, say, Tesla at 185-ish or anything under 200, I think you're fine, right? So now look at this. So now someone bought it in 2012, right? Somebody bought Apple in 2012. And then it tanked almost 40%. Look at that. It tanked almost 40%. So now, it would have been better for them to take a loss now I'm talking about Apple now, a good company with good revenue, in the AI, they're not going anywhere. And so, as you can see, if they would have stayed in, they would have made their money back, right? And then somebody bought it here. And then what happened? It tanked again. Somebody bought it again here in 2018. What happened then? They lost 30%. And then remember COVID, the flash crash when everybody thought the market was done? Look, bam. Look, flash down. So what are you saying? I'm old school. I take notes, right? What I'm saying is you don't have to time the bottom perfectly, right, to make money in this market. But it's better to buy in a low. As a matter of fact, I showed you guys a statistic that showed that people that buy stock when the S&P is more than 25% from its highs, you generally make money 1 to 3 years after the bottom. You're still in a range where you're going to make money. The lower you buy a stock, the quicker you will be in the money, right? Just remember that for those of you that are new, right? So why are you saying this? Let's look at this. Let's bounce around. Let's look at Meta, shall we? Look at this. All right. So we see Meta, right? As a matter of fact, I'm going to show you guys right now something on Meta that's extremely important, right? So we see Meta here. Let's go down. We see Meta, right? And let's look at Meta for the year. For the year, Meta is down, as you can see. Let's call it 65%. Remember that number, 65%. What did Meta do? They abandoned their core customer and it tanked by 65%. And you say, hey, yeah, Larry, the entire stock market is down. That is true. The entire stock market is down. So let's go into the S&P, right? So this is what I want to show you guys. This is quite interesting, right? Let's go to the S&P 500. Let's look at this, good people. Now you see the comparisons to the S&P 500 and Meta. So Meta, which is Facebook, is down 65%, let's call it. The S&P is down 19%. So what does that mean? Meta sucks right now. It is underperforming the S&P, right? So let's do this. Remember this, 65 and this. So let's get rid of this. And remember, what did I say? What did Meta do? This is still Meta. Meta abandoned its core customer and its core values, right? We got on Facebook to show baby pictures and our perfect lives, right? All of that, right? And they have abandoned that and just went to Meta. Who else is doing the same thing, right? Tesla. Tesla has abandoned the CEO. I don't care what you say. If you look at a chart, soon as he got with Twitter, it tanked even more. Now remember, the S&P was just 19%. So watch this, how odd this is. Look at that, good people. The two companies that abandoned their core people are both down by 65%. You see that? You see that, right? So let's compare that to the S&P, right? So you guys see it, 65, 65, 18. Now I know somebody is saying, oh, but look at, okay, well then let's look at Apple. Here we can see it right here. Apple's only down 25%. Microsoft is only down 28%. Nvidia is tanking by 48%, all right? Amazon is down 50%. But look at Meta and Tesla, both down 65%. And the data is right here, right? Now, what do we do with this information? We don't say that these companies are not good. We're going to see when we can make a killing off of these two companies. Now, for those of you that are waiting on a Santa Claus rally, like I was, and it was set up good for that, but we know Fed Jerome Powell is the Grinch that stole the Christmas rally. I got some bad news for you. There is a report I want you guys to listen to very closely and look at the percentages, because this is really forward looking for the end of this year. Today is the first day of the quote unquote Santa Claus rally or Christmas rally, which is heading in the wrong direction, right? But listen to this.
You should just relax and have the Santa Claus rally. And there it is. It's starting today, folks. This is a famous old little Wall Street saw here. It's the last 5 trading days of the year, first 2 of the new year. It's good for an average gain of 1.3%. By the way, that's statistically pretty valid. That's a very good indicator. It doesn't happen like that normally, and it works 80% of the time. The Santa Claus rally is up. And the 20% that it's down, that's when it gets interesting, because it's an indicator. And the point about the whole thing here for Yale Hirsch at the Stock Traders Almanac, he discovered this 50 years ago, is that failure to rally generally will precede bear markets or situations where you can buy stocks lower in the next year. So the famous line here, if Santa Claus should fail to call, bears may come to Broad and Wall, and that is Yale Hirsch, 70.
So you guys hear that. This works 80% of the times. The 20% of the times that it don't, you can buy equities at a lower price the following year, which is 2023. Now, what else do we know? We know that it is a bear market going into a deeper recession, right? And what type of recession? Earnings recession. Earnings recession is already happening, right? And so before we get to this last point, because I'm going to show you when I'm going to start, I'm going to show you when I'm going to be buying Apple, Microsoft, Tesla. Now, you go, Hey, Larry, I thought you were already buying those. I am in my $5 a day challenge, but I'm talking about when I'm going to be spending tens of thousands of dollars, all right? Hey, but before we do that, make sure you look at this. This is what I want you to do. Let me spend 10 seconds on this. Download this top link, which says Moo, and get 10 free stock for $100. If you want 20 free stock, deposit $1,000, but get 10 stock for $100 right away. And then I want you to click the link below that, which is Webull, and get an extra 12 free stock. And how much you need to put in for that? $1. $1 for that. So spend $101 and get 22 free stock. Someone got a $150 Apple stock by depositing $100 into, by depositing $1 into this one it was. And someone got an Apple stock in the other one. So, hey, it works for you. Remember, get that funded today because time is running out and we only have 5 trading days left. Now, I want you to hear this video, and I'm going to tell you on yesterday's video, I said myself that if you're buying stock in the $3,200 range of the S&P 500, you're fine. I think it's going down to 31. As a matter of fact, my dump all of my money in, my load the boat, which you guys haven't heard me say this entire year because it wasn't a year to be loading the boat. That number for me is 30,000. I believe that the S&P, whether it's a flash crash or anything, I believe it's going to happen at the beginning of Q2. Why Q2? I believe after Q1 earnings, that I believe that is when the market will tank the most. Now listen to this, gentlemen, which I found very interesting because I know a lot of people was going, really? It's going down to 30? But listen to what I just found.
With rising interest rates adding to the deficit spending. So I expect the market to fall down to around 3,000. And the only hope out of this situation is maybe with greater scientific advancements, the economy will grow out of its increasing debt burden.
So it sounds like you think. It sounds like you think in the shorter term that investors are more focused on the backdrop of earnings rather than whether or not disinflation accelerates or the Fed pauses.
Well, earnings are, we know that earnings will be lower in the coming quarters, right?
So earnings will be lower in the coming quarter. I believe Q1 the earnings will be lower. We know that the FOMC meeting is February, right? As soon as February start, we have the FOMC meeting. When Q1 earnings come, I believe that would be a downward push on the market. I believe that the Fed will see that inflation is coming down and he will start to go neutral. Now he may do 50 because he's gonna keep the pedal to the metal. He may do 50 in February, and then he may do 25 after that, and then he may do one more 25, and then he may be forced to go to neutral. But if inflation drops fast enough, he will just go to neutral, right? And then I believe after about 3/4 of 2023 that the Fed will be forced to go to actually start reversing. I believe, I know I stand alone. A lot of people said, oh, he's just going to be neutral. I believe he's going to reverse because of things when that S&P hits down and rebound from that point. So my point is you don't have to guess the bottom. But at some point, you need to get in. And most people miss getting in, and then we're in another bull market and you're chasing. So you make the decision on your stock. But what I will tell you is I'm not focusing on heavily engaged in the small cap stock, trying to do a 5-bagger, 6-bagger, 7-bagger. You and I will make plenty of those plays. I'm going to bring it to you. But this is the time to truly build generational wealth by loading up on these good, solid, have money, have revenue companies that are going to be around forever. This will be the opportunity to buy. And so I'm going to start really loading up on Tesla when I see that. Now, I may dib and dab a little bit at this price range. It's intriguing, but that doesn't mean anything. What truly means something to me is if the S&P gets down below 32 and it hits the 31 and 30. What do you think? Do you think that Tesla is going to be $300 at that point? No. As a matter of fact, all of the big cap stock, the Apples and Tesla, they are they're the heaviest weighted on the S&P, and so they're going to come down because we will be in a earnings recession. And so that's when we will load up. And so, Larry, what happens if that never happens? I've been dollar cost averaging all along since the beginning of this year. And so I have two plans working simultaneously. So I can't miss the bottom because I've been dollar cost averaging with little money. And I charge all of you, take your coffee money and start next year. I believe you'll be able to start in Q1. I believe that the S&P will hit 35 in January. I do. And I believe it'll start to trend down. But I believe when those earnings come in and they're misses, that it will actually bottom out. As a matter of fact, I believe that that will be the bottom of the market, the bottom-ish. And so I'm not trying to guess the bottom. I'm just trying to get in an oversold market, right? Leave me a comment if this makes any sense to you. You see the correlation with Meta and Tesla. They're both going to be oversold at some point. But right now the PE is too high on Tesla still. And so I'm going to let the Q1 earnings dictate when I'm going to buy. All right? Leave me a comment, good people. Remember to check out those two links below, top and bottom. And remember to join me on Saturday because I'm going to do something a little different on Saturday. All right? Love you guys. Live, love, laugh, and learn.